The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. So let's get right to it. Elf Beauty, ELF is the ticker, and you would think that this is for woodland creatures that are in Lord of the Rings novels and gosh knows what else. Maybe St. Patrick's Day, leprechauns, some people might think they're elves, but ELF, ELF stands for eyes, lips, and face, not the woodland creatures. It's a Zacks rank #1 strong buy, and it has that growth divergence that I love to see. It tells me right away I'm on the right path. As a growth investor, I got a strong growth style score and a weak value style score. And I love that because I know that growth investors and value investors are inherently looking for different things. So when there's a big difference in the growth score and value score, I know that I'm on the right path. Boy, oh boy, and let's just jump down here for a second here. Look at this right path that I found. Woo-wee! Gosh, I love seeing something like that. And I know you do too. And growth investors, we get to see that all the time. Value investors, I don't know, sometimes. All right, so first thing we do is we look at the earnings. We see 4 big beats here, and these are mighty, mighty beats, powerful, impressive beats. Averaging 105% over the last 4 quarters. That means they're doubling the number. Analysts better get on their game if they want to cover this thing right. Estimates moving up. So we got 15 cents to 19 cents this quarter, 38 to 43. There's that bump. I love seeing that. Then, 12, 13 to 136 for this fiscal year. Notice fiscal years. And then next fiscal year, this fiscal year is coming to an end here. This year, so 122 to 151. We're all headed in the right direction on estimates, and that gives us a Zacks rank #1. So one of the things about, well, let's just do the fundamental here. So we're looking at 50 times forward and trailing. Interesting. But about 50% top line growth. So that's always wonderful. Price to book getting up there, 9.5 times. And for a retailer, that's pretty high. I'll say that. 7.3 price to sales. And if we look at the margins, boy, I see double digits. I see nice, 50%, 50 basis point growth there. So moving up. So more margins, more sales, more margins. That equates to higher stock price because higher earnings. So if we look at this chart here, we can see what's going on. Just a slew of beats. This thing has just started to really pick up. The estimates are moving along with it. We've got back-to-back beat and raise quarters from ELF. And I like to say a beat and raise quarter is 6 months of good news all at once. So we had 3 months, the last quarter, where the beat happened. We did better than expected. And then the next 3 months are going to be better expected, the raise in guidance. So beat and raise. So over the last 2 quarters, we've got 2 back-to-back beat and raises. That's like a year's worth of very good news for ELF. So let's keep them on your radar screen. I think this stock goes a lot higher. And we'll revisit this one later down the road. Okay, let's check out our next one. It's One Spa World. OSW is the ticker. A Zacks rank #1. And once again, oddly enough, in the aggressive growth videos here, we've got a very strong growth style score and a weak value style score. We've already talked about what that meant. And you can see that the stock has bounced up since the beginning of the year from 9 to just about 11. I kind of like those working hours from 9 a.m. to 11 a.m. Oh, I'm teasing. Work a lot harder than that. Just not smarter. All right, so let's go ahead and look at our review here. We see all sorts of beats. Woof! And my pen just covers it right up. 84%, outstanding. That's not quite the 100% level that we saw for Elf, but it is pretty good. So look at this: 7 to 8 to 10, moving in the right direction. 8 to 9, I like seeing that. 18 to 22 to 25, I love it. And then 45 to 48, we're consistently growing the number here for OSW. And OSW operates, if we didn't talk about this, it operates spas on cruise ships. Big time growth year, obviously coming off of a COVID year, so we're going to see revenues really pop up because there's so many more people going on these cruise ships, which is good to see. You know, you gotta have a rebound here. Get rid of this COVID thing. I think we know the COVID's over, for the most part. God willing, let's all say a prayer and hope that that's true. 23 times forward earnings is pretty respectable for a company growing at a monster clip. Less than 3 times price to book, but the 3 times is that number where the value investors start to disappear from the conversation. 2 times sales is great to see. And here you see your operating margins go from -6 to break even and then an NA. So we're going to get those margins moving a lot better. So let's take a look at the price here. What's been going on? COVID. Oh, we're not going to go on a cruise ship ever again. Maybe we will. And then it's like, when is the cruise ship stuff really going to start working? And it started to work. As you can see, estimates are nice and high up here. That denote that the possibility of the stock returning back to COVID highs here is looking better and better. Boy, that was a lot of fun. Join us next time when we take a look at another 2 stocks for your aggressive growth radar screen. And be sure to go to Zacks.com/promo to check out all of our recent promotions.